Hey, this is Arthur Hill, Chief Technical Strategist at trendinvestorpro.com. You are tuned into our YouTube channel for our weekly video analysis. If you like this video, please give us a thumbs up and consider subscribing. So today we're going to dive into StochClose. We're going to show you how to use it for ranking, how to use it for trend signals. I'll show backtest it a little bit, and then show you 3 signals and 3 ETFs. So I want to start off with the ETF ranking and trend signal table here at trendinvestorpro.com. And I do focus mainly on ETFs. And this table was updated as of the close on Tuesday, November 9th. But I did test the StochClose signals, and it doesn't make a bit of difference if you buy them 1, 2, 3, or 4, up to 5 days out. And so that's why I chart the new trends on this table. So there's a column there for new trend. And if you click that, you can see the new trend signals within the last 5 days. Now, one word of caution here, this is purely systematic. Okay, what you see on the price chart may differ. What you think you see on the price chart may differ from this systematic approach to signals. When you're looking at trend signals, you take kind of the trend followers manifesto in that you don't know which signals will result in whipsaws, you don't know which will lead to big trends, and there will be whipsaws. Around 60% of these signals will result in a loss or a whipsaw. 40% will result in a profit, and of those 40% that are profitable, 10, 15, 20% are going to have some nice trends that are going to pay for those whipsaws. They're going to be make the lion's share of the gains. But going back to this table, we've got the StochClose indicator here, and that's what I'm using as a relative strength rating. It's kind of like a volatility adjusted relative strength indicator. It measures the level of the close relative to the 6-month high-low range. And the higher you are in that range, the stronger the ETF is. And you can see semiconductors are at the top. They both have 100, which means they're basically at 6-month highs. And if you go over to the right here, we've got the 52-week range indicator, which is also at 100, which means we're at 52-week highs. And if we reverse this sort, we can see these are the ETFs near 52-week lows. We have the Euro, China Internet, emerging markets, Brazil, and China large cap 50. And there is alternative harvest cannabis. So we want to avoid those. But going back over to the left, StochClose is my main ranking to see where the strength is in the market and where the weakness is. And if you look at the strength, we can still see a lot of strength in technology, semiconductors, 5G, cyber, XLK. And we go down, cybersecurity again, and then software and QQQ. Now, I do think these ETFs are a bit extended because they've had big runs in the last 2 months. But there are some other ETFs that have really improved. And we can look at the 5-day change for the StochClose, and we can see the biggest gainers as far as the StochClose value is concerned. And look at that. We have home construction, we have retail, we have microcaps. Staples, not too interested in because we're in a bull market. I want more offense. But Jets had a big improvement. Technically in a downtrend still though. Materials, a big improvement. And so if we look at some of these new trend signals, I'm going to click this new trend signal table. We can see home construction, a new trend signal, microcaps. As I said, I'm going to remove these ARK ETFs. That would be print and Israel. But biotech, a new uptrend signal. And the biggest sector in the small cap ETF IWM is healthcare. And a lot of those are small cap biotechs. And a lot of those are in XBI here. So seeing a lot of strength there. And then gamer getting a new uptrend. And then base metals getting a new downtrend signal. Now this table, by the way, is only available to subscribers. If you click on this sort prefix column here, then you get a top down and you can see where the strong parts and weak parts are. We can see all the major index ETFs at the top here are in uptrends. And then if we look at the sectors, all of them except utilities are in uptrends. XLU is in a downtrend. You can see StochClose is at 50, which basically means it's in the midpoint of its 6-month range. REITs are near the high point, so they are strong with the StochClose in the mid-90s. But if we scroll down here, we can see the technology-related ETFs are in uptrends, except for iPay. It is the weakest. And then we scroll down a little further, we can see home builders. iBuy is still in a downtrend. That would be the online retail ETF. XRT is in an uptrend. The finance-related ETFs are strong. Regional banks, insurance, mortgage REITs. The defense ETFs are relatively weak. And then if we scroll down further, we're going to get, well, I need to go to the next line here. And then we will get to bonds. We're going to get to bonds. Bonds are a real mixed bag. We got some uptrends and we got some downtrends. We can see gold is still in a downtrend, but it's breaking out on the price chart and maybe triggering an uptrend signal this week. And then we can see agriculture is in an uptrend. DBA is strong. And then we get down to the foreign market ETFs, and we can see mostly downtrends there. India is in an uptrend. Taiwan, Russia, frontier markets, and the Eurozone ETF is in an uptrend, even though Germany is in a downtrend. So what is the state of trend following now? And what I did was I went and did a back test based on those StochClose signals that we were looking at on that table. And I tested all signals for these ETFs, 123 ETFs, because I didn't test the ARK ETFs because they're actively managed. So this back test goes back from 2007, January, until 2021 on Tuesday, so November 10th, basically. So it's covering quite a long time frame and includes a bear market. And so I ran this back test, and Amy Broker's really fast. You just click, and it runs it very quick. And so basically, we're buying every StochClose bullish signal, and we're selling every StochClose bearish signal. And how would that have performed over time? So if we look at this, we can see that you would have had a winning percentage of 42% and a losing percent of 48%. And your average winner would have been plus 23%, your average loser minus 6%. And then the average profit loss was 6.4%. That's your expectancy, basically. So this strategy does have a positive expectancy if run over time. It's going to go through drawdowns, just like any trend following strategy. And we can see that when we look on the equity curve chart. But this equity curve chart can also show us the strategy as far as whether it's working or not at the current time. So basically, when I run this all signals test, I'm just doing a nominal $1,000 per trade. All right, it's not a portfolio. That's why when you're looking at this number here, it goes from 1 million to 1.14 million, basically. So you're not going to get a huge dollar return because I'm taking just a $1,000 nominal position here. And what we can see is the ebbs and flow of the equity curve here. You know, you had the bear market in 2008, and then we had a big run in 2009, and then we had a lot of choppy price action in 2011 and into 2012. Had a nice run here into 2014, and then had a lot of choppy price action in 2015, and then had a huge run in 16 and 17, got choppy in 18 and 19, and started up, and then we got hit with the COVID crash there. So the trend was turning up for the trend following strategy, but got hit. And then after the COVID low, had a really big run and had a breakout here. And I want to show you that breakout by using a 2-year equity curve. So here's the equity curve going back to January 2020. And there you can see that dip, and then you had a big run up, a little bit of a choppy action, another big run up into February. And then when the higher beta names started correcting in February, March, and into April, we had a drawdown there. But if you look at this chart overall, you can see the equity curve was basically flat for several months. And then you can see it broke out. And that tells me that trend following is starting to work again now that we get this breakout. And this breakout happens to coincide with the breakout we're seeing in small caps because the market rally is broadening. Before it was a bit narrow. And so you're getting whipsaws in some of your signals in other ETFs. You were getting, uptrend signals in tech-related ETFs, and those were working, but you're getting whipsaws elsewhere. And that's what happens with a trend following strategy. But the equity curve here is breaking out, and that tells me that trend following is working again after a hiatus for several months. So a couple of the new signals I'll show you. This is XBI, and the gray zone shows you the 125-day high-low range. And then the green line is what you need to cross to get StochClose bullish. And the red line is what you need to cross to get StochClose bearish. And the 5-day moving average, that blue line, because I smoothed the indicator, needs to get above it. And so you can see XBI has that bullish cross above the green line there. And if you look at the StochClose indicator below, it moved above 60 for the first time. It was green back in March, and it went flat, bearish, and then flat, and now it is turning bullish again. Don't know if this will be a whipsaw or a nice trend, but it is a current trend signal. Elsewhere, we have ITB, housing, turning bullish again. And you can see a bit of a whipsaw, and this is going to happen with trend following indicators. So if you look at the StochClose, you can see it turned red by moving below 40, and then it turned green by moving back above 60. And if you look on the price chart, and I'll open that up a little bit, you can see that ITB had a huge run. First of all, I'll close it a little bit. A huge run from 25 to 75. It tripled. And so it was entitled to a big correction, and it had this big correction. And it was such a long correction, you move below the red line there. And that's what caused StochClose to turn bearish. You were clearly in the lower half of the 6-month range. That's why it turned bearish. And now we've gotten above the green line. We're clearly in the upper half of the 6-month range. So we're back bullish again on housing. So if you're interested in this StochClose indicator, you can chart it on Stock Charts ACP using the Trend Investor Pro Indicator Edge plugin. You go down to the bottom right and you click the plugin icon, and there you will see the plugin. You can click that for more information. And over on the left there, you can see all the indicators that are available. And there is StochClose, which is my preferred indicator for ETFs. And on this chart, we can see industrials XLI getting a breakout and then following through, and StochClose turning bullish there in the second half of October. So if you'd like to know more about trendinvestorpro.com, you can click on the link in the description below. If you like this video, please give us a thumbs up and consider subscribing. Thanks again for tuning in, and I'll talk to you again next week. Have a great day.